Hi everyone, welcome to this session. I am Mrs. Princy Metilda, working as an assistant professor, Department of Commerce C and PG Commerce at AJK College of Arts and Science, Navakkarai. Now, we are going to discuss about the paper related to banking theory. This paper contains so many topics. The first topic will be origin of banking. Origin of banking is nothing but the birth of banking. It is banking will be a part of our life. Not only those things, we may be an industrialist or the business people or the educationist or education purpose we are doing any business, whatever it may be, we are depending banking activities. Then the term banking is derived from a French word that is bankers, which means table, that is the topper level, higher level. So next one we are going to discuss about the second topic as a definition of banking. This definition of banking is nothing but as per Banking Regulation Act 1949, banking as an accepting deposits from the public and returning them as loans and advances according to the rules and regulations. Next topic will be the classification of types of banks. The first number one type will be the central banks, next commercial banks, then industrial banks, exchange banks, cooperative banks, savings banks, national banks and international banks. Let us discuss each and every bank in a detailed manner. The first one will be the central banks. It is the foremost banks and head of the bank for all the banking sectors. That is Reserve Bank of India. The main role will be the currency regulation. Number two, it performs general banking agency on behalf of a particular state. Then it has a custody of cash reserves. Not only those things, for rules and regulations and giving the guidelines to all the bankings. Not only that, control of credit is the most and important function of the central banks. Next, commercial banks, that is accepting deposits and lending loans are the normal functions of the commercial banks. Then they are doing additional functions as transfer of funds and agency service behalf of their customers and credit creation are all the functions. Next, industrial banks. Industrial banks are only concentrating the development of industries. It is the financial institutions. It performed with the limited scope of activities, that is, the role of these banks are very limited. It is used to develop and concentrate only the industrial areas in the economy. Next one, exchange of banks. These exchange of banks will be accepting deposits and advising the public to issuing the loans. Then not only those things, they are doing some additional services, credit remittance facilities, then locker facilities, stock investment facilities, then card facilities. Then their major role will be portfolio management, that is buying and selling of shares for their public. Next one is cooperative banks. To promote the rural areas and develop the urban areas, giving the employment and small scale development, consumer finance, home finance are all the most functions of these banks. Then the next topic will be banking system. Banking system are unit banking system, branch banking system and universal banking system. The first bank will be the unit banking system. This operates only limited areas. It does not open any branches at any places. more responsive to fulfill the local needs. They have raised the capital and deposit their local level. It was originated and very famous in USA. Next one will be the branch banking system. Branch manager will be the responsible for all the activities, hiring employees, marketing, approval of loans and building customer relationship are the major functions of this branch banking system. Next one, universal banking system. They are function at international level. All over the world, the universal banking performance well done. Their performance are housing finances, giving retail loans, insurance facilities and evaluate customer, and they are working under one roof. Banking markets. Banking markets are the financial institutions which promote their banking products. They are coming under two heads. Number one is government institutions, another one is private institutions. Whatever it may be, whether they are private or a government, they are promoting the banking products among the public for the profit. Then the next one will be functions of modern commercial banks. Nowadays, the role of commercial banks are very popular among the public. They are accepting deposits from the public and issuing loans and advances to them. Then not only those things, they are doing agency service, then foreign exchange facilities, general utility services, then financial advisory services, then they are advising as a portfolio management. Portfolio management is nothing but buying and selling of securities. Then they are doing some foreign agency service also. The next will be commercial banks balance sheet. This balance sheet is nothing but a financial statement of assets and liabilities for the last date. Normally, a business is started 1st April to 31st March. At the year ended, we are preparing our balance sheet to show the strengthness and financial position of our business. It has two sides. Number one is liabilities, another one is asset side. The liabilities contains the authorized capital, issued capital and scheduled capital, called up capital and paid up capital and reserved capital. The authorized capital are as per SEBI, that is Stock Exchange Board of India, whatever the allotment that is known as authorized, we are having an authority to issue the capital, that is our authorized capital. Then from the authorization, we are issuing how much amount we need from the public should be issued, that is issued capital. Then the next one will be called up capital. How many we are giving the application, that is called up capital. How many we are receiving, that will be coming under the paid up capital. Then the next one will be reserves and surplus. Reserves are nothing but cash reserve, secret reserve. For emergency purpose, we are using those reserves. Then deposits, loans and advances, bills payable, then creditors. All these items are coming under the liability side of the balance sheet. The next one will be asset side. Asset side is whatever asset we are having, that is what is our worth, what is our value, it shows the asset side. In this asset side, we are treating three items. One is cash, number two bills discounted, and another one is loans and advances. Cash is coming under cash at bank and another one is cash in hand. At present, what amount will be available in our cash and what will be our bank balance. All these aspects are coming under cash items. Then how many amounts are discounted. Then next one will be bills receivable, sundry debtors are all coming under the asset side. From this, totally these assets and liabilities should be balanced. Then only our account will be correct one. Thank you.